Did you know that star investor Cathie Wood believes that Tesla stock will go 10x? Well, it is no secret that Cathie Wood is a huge Tesla bull and is optimistic about the EV company's future. Still, it is worth knowing what her thoughts about Tesla's future are now, so you definitely would not want to miss this one. In early October, star investor Cathie Wood purchased 132,000 Tesla shares. Wood's flagship fund, ARK Innovation, bought a tranche after Tesla reported a miss in deliveries in early October when Tesla announced its delivery and production numbers through a press release. In late October, Wood bought another 66,190 shares in Elon Musk's company, marking her firm's second purchase in the EV maker in October 2022 alone. Wood's latest buy came after the stock fell following Tesla's Q3 report. This alone proves Cathie Wood's bullish stance on Tesla. In light of that, Wood believes that Tesla will go 10x. In an email update to investors, Wood explained that Tesla could expand its addressable market tenfold by cutting the cost of an electric vehicle in half. Wood wasn't the first to raise this point. As Tesla's EVs have soared in popularity, experts have raised questions about what more affordable EV models could mean for the company's future. On the same day that Wood made her 10x prediction, Tesla reduced its EV prices in China due to concerns over falling demand. The company cut the prices of the Model 3 sedan and Model Y SUVs by 5% and 9% respectively. Even in China, the world's largest EV market, demand for Tesla's vehicles may be declining amid increasing competition from domestic automakers like NIO. However, with Tesla stock rising today, markets don't seem to be reacting too badly to the price reduction news. This supports the idea that Tesla may be best served by offering less expensive vehicles. In the recent Tesla Q3 earnings call, Musk noted that the organization is developing an electric vehicle that would be available at roughly half the cost of the Model 3 and Model Y. While Tesla is one of the trendiest names in global EV markets, there's no denying that its vehicles are costly. It is no secret that Tesla did not meet Wall Street expectations in the third quarter financial report. That strongly implies that demand for highly priced EVs may be waning as consumers face financial pressure. According to Barron's, an American weekly magazine newspaper published by Dow Jones & Company, many Model 3 and Model Y vehicles sell for roughly $60,000, and EVs account for only about 5% of total U.S. car sales today. Cars priced at about $30,000 account for roughly half of the U.S. market. Cathie Wood-led ARK Invest outlined that vehicles at price points north of $60K address approximately only 5% of the total U.S. automotive market. At the same time, that market expands to nearly 50% when a vehicle's price point drops below $30,000. Therefore, if Tesla were to launch a cheaper option compared to the Model 3 and Model Y, its addressable market would increase significantly. ARK Invest stated, "In our view, fears of declining demand for Tesla vehicles are misplaced. If anything, Tesla is supply constrained at current price points, and a $30,000 vehicle could expand demand tenfold. We would not be surprised if Tesla's next generation vehicle is the Cyber Robotaxi." In a market where demand fears are increasing, companies selling more affordable products are likely to benefit the most. Compared to Tesla, automakers like General Motors, Ford, and Toyota offer much less expensive EVs. However, none of these companies have Tesla's cachet when it comes to electric vehicles. Therefore, Wood's prediction that Tesla will see a much larger addressable market once it perfects a less expensive model is certainly plausible, and there has perhaps never been a better time for an affordable Tesla model than now. Tesla head of investor relations Martin Vicha shared at a Goldman Sachs conference that Tesla has plans to roll out a more affordable model in the future, according to Business Insider. However, it may not be its priority right now. Business Insider is the original publication of Insider Inc., focusing on business and financial news. According to the report, Vicha acknowledged the need for having a broad portfolio if the company wants to be a high-volume automaker. Before unveiling its company-operated robotaxi, Tesla needs to have a more affordable offering, he said. That said, the senior executive does not see the need for a new model anytime soon, given the stronger-than-expected demand for its Model 3 and Y vehicles. Model Y will basically next year become the best-selling vehicle of any kind of all time in the world, Vicha reportedly said. This is notwithstanding the elevated costs from the Fremont factory and including almost no leasing, he said. The cheapest Tesla vehicle, the Model 3 rear-wheel drive, costs $40,390, including potential incentives and gas savings. Rumors of a $25,000 car have been long in the works, though neither Tesla nor its CEO Elon Musk has shed concrete details about it. However, others believe that Tesla is not going to build a low-cost EV anytime soon, if ever. There are several reasons for this. First, Tesla is making so much money through profit per sale right now that it would seem daft to weaken that with the lowest cost model and smaller margins. Second, given the worldwide shortage of chips, it is focusing on the already highly popular and profitable Models 3 and Y. But there is something more fundamental behind Musk's reasoning, and it goes to the very future of the electric vehicle transition and car ownership. And it helps explain the astronomical valuation of Tesla, because this is not just a car company that happens to be electric. It's just as much a software and service company. In the 2021 Q4 earnings call, Musk dismissed the idea that Tesla had time to focus on a $25,000 EV because we have enough on our plate right now. Too much on our plates, frankly. Musk explained later in the call that a fully autonomous car will be used 5 times more than a regular privately owned passenger car, and that delivers a massive amount of potential revenue and earnings from a single vehicle. For now, Musk says full self-driving could deliver the biggest uplift in asset value of any product ever seen. A car with FSD can be used many more times at a lower cost than a car with a driver. Hence his claim that using a robo-taxi would be cheaper than a bus ticket. It will also have other significant impacts, including parking lots, because cars won't be sitting idle all day, so many parking lots won't be needed. But there could be a major problem with a boost in traffic because there will be so many cars on the road. There will be a crazy number of cars. I mean, it's going to be, I think, really cheaper to go from point to point with a robo-taxi, which is an autonomous Tesla, that costs less than the subsidized value of bus tickets, Musk said. Even Cathie Wood's firm ARK Invest calculated that Elon Musk's robo-taxi fleet could generate more than $1 trillion in annual operating earnings by 2030 in its Big Ideas 2021 report. At the core of Tesla's autonomous strategy is the development of the robo-taxi fleet and its autopilot and FSD software. The EV automaker released its full self-driving beta in late 2020, which is capable of driving on inner-city streets. FSD beta testers have been very vocal about their experiences with the software, often commenting that they see rapid improvements within short intervals. Although Tesla has made tremendous leaps forward with its FSD beta, there is some support for the company to launch its ride-hailing service with drivers behind the wheel. Even though there is some debate at Tesla whether or not they should launch a human-driven ride-hailing network, it would be a very good bridge, we think, to their autonomous strategy. And we think they will decide to do that, Wood said, expressing some of ARK's general thoughts on the subject. Some Tesla owners seem to agree with ARK Invest's opinions about the robo-taxi fleet. Still, regardless of the FSD, Cathie Wood and the ARK Invest team believe that Tesla could expand its overall addressable market tenfold if Elon Musk's EV maker were to develop a product that could sell at half the price of its current offerings. Other experts have also expressed their opinion about what more affordable EV models could mean for Tesla's future. Tesla growing 10x is nothing but good news for its investors. If and when Tesla indeed started manufacturing low-cost electric vehicles, it will be very helpful to a larger population too. Imagine having an EV available to you at an affordable price. Subscribe to this channel and have our community grow 10x.